9% year over year, both of those beating estimates, also setting new June quarter records. Services revenue, which you were just talking about, George, $30.74 billion. That did miss the estimate, looking for 31.36. iPad revenue, $6.19 billion, is down about 6% year over year. Also fell short, pretty significantly short, of the $6.89 billion estimate.
But what happened to
China
stock?
revenue also missing $18.82 billion. The street was looking for $19.5 billion. America's revenue of $45.78 billion, slightly beating the $45.42 estimate. Gross margins are coming in at 50.1%, including a favorable impact of approximately 2 percentage points from tariff refunds here. Now, as I'm looking at the reaction to Tim Cook's last report here, it's down about 2.5%. So, George, as you're looking over these numbers here, I mean, we know iPhone, very important here. iPhone revenue coming in a little bit better than expected. Services revenue coming in a little bit under expectations. Revenue overall just meeting expectations here. What's standing out to you most in these numbers?
Let's see why it's like
I think
this.
first off, the services number, which came in slightly less than the estimate, is probably a part of the culprit that we're seeing in terms of the price action. Not too bad after this report, considering some of the other names we've seen in the mega cap space. But I think that the revenue numbers for the iPhone, there was a lot riding on that in terms of this quarter, because if you look at this quarter's estimates, they were actually higher by around 31% compared to last year. So they were riding, 23% compared to last year. So they were already expecting a higher percent of share of total revenue coming from iPhone this particular quarter. In fact, they were looking at services revenue for the quarter, which was estimated to be around 31.4, to be actually a lower percent of total sales compared to what they were last year for the same quarter. So this was effectively a quarter where they saw the iPhone was going to gain more traction because it was supposed to be the highest percent of total sales for the quarter relative to services. But I think the services missed because they were already expected to be down on a percentage basis in total revenue, or as a percent of total revenue, is a little bit of a hang-up for the stock price.
And as we look at China, too, I know expansion into China was an important focus as well. That revenue improving year over year, up 22%, but it also missed the estimates there by close to $1 billion here. And we also are missing in Americas. And as I'm looking across some of the others, too, here, Europe is a beat. They beat by about $2 billion higher than the expectation, also 22% growth there. Japan has some growth year over year, 13%, but it's about $1 billion below the estimate here. So very mixed revenues as we look across the globe.
Yes, Apple is down. Yes, subscribe, give like to this video.
Well, that's the thing. I think, looking at Apple, we have to consider their core business. And their core business has been facing competition in various international markets, whether it's China, whether it's Europe. But again, like I said, if they can continue to grow their user installed base through their iPhone, which they're gaining over time some market share globally, but they're facing a lot of competition. So this is, I think, their strategy, which is to effectively start building more of a broader ecosystem of verticals.
We'll see how Apple will be open tomorrow.
Intelligence, but again, you have to consider Apple will be introducing more intelligence or artificial intelligence from other companies who are better at doing it than Apple. And I think that's probably a good strategy in the long run, considering what we're seeing in terms of spending from the mega caps and the hyperscalers right now. But still, if their numbers are coming down lower than estimates in places like China or in other nations, that's gonna effectively dampen the stock price, because at the end of the day, the stock really, you could say, is priced for perfection based on a really nice movement. In fact, it has performed quite well, especially in the last 30 days relative to the markets and to the other mega caps, because they have been more spendthrift in AI. But nonetheless, valuation at around 38 times next year's earnings is about 30% higher than their historical 5-year average. So with that said, they have to come in and raise and beat across the board, or the stock will sell off, and we can see that that's the case here in the after hours marginal.
And George, you mentioned the spendthrift, and I've had this talk with other people as well here. So I want to take a look at some of the balance sheet items. Their cash and cash equivalents coming in at $39.54 billion. The estimate was looking for $53.15 billion. So pretty considerable miss
Yes,
on
hello,
cash on
subscribe,
hand.
give like.
Their assets coming in
To
at
this video.
149.82 was
Say
up
America.
year over year, but the estimate also looking for higher, 153.38 billion. Their liabilities also coming in higher than expected, 149.33 billion. Estimate looking for 138.32. I mean, so some interesting results there for a company that has traditionally been spendthrift. They're low on the CapEx side, but some mixed metrics in this report.
Well, I mean, those are balance sheet metrics. Those are going to change, quarter to quarter. They're not necessarily dynamic like, earnings and, of course, income results or even, collaborations or deals, for instance, with perhaps, some of the Chinese memory suppliers. I think it's also, too, Marley, I mean, we've seen this change. When the conference call comes about, things can pivot for Apple, especially if they announce some sort of, more in-depth deal-making going on with Chinese suppliers, assuming they can get, some policy or regulatory approval, if that's going to be some hang-up for them to secure some of this memory from places like China. It's important because it'll help dampen the supply price of memory across the globe, but it'll also be important for Apple, which I suggested earlier. Strategy is to get the iPhone to customers or users at a much cheaper price. And the only way they're going to do that is through input price controls, and that's primarily through memory. And CPUs, by the way, which they're now more vertically integrated in their own technologies along with their software.
And a more volatile move was expected with this report. The options market pricing in about 3.4% move. The median for the past 4 reports has been about 1.5%. So we're still within that range. But George, you mentioned too, Apple, one of those companies that traditionally does see a bigger move after the call, and we get the commentary from management. Specifically with it being Tim Cook's last call as well, too, as the CEO. Yeah. What is the first question on the call?
Well, that's a good question. I can't say what will be what they ask, but I'm sure they're going to address, Tim Cook's final quarter. May talk about essentially passing the torch, his identity with the company and the identity of the new CEO with the company. I think that's going to be important in the context of the overall transition in terms of leadership. But I do think there's going to be a lot of questions about, pricing strategies, securing lower input prices through memory, because I think that's the narrative. I mean, I think the narrative, to be honest with you, Martin, I talked about this throughout the last couple of weeks, that we saw in terms of the selling in the memory and semiconductor names was really a function of what Apple has signaled they're trying to do, which is negotiate with China, and that'll eventually bring more supplies to a credible buyer, because they do have long-standing multi-decade partnerships in manufacturing with China. And if they bring more credibility to China's, memory infrastructure and their build-out, that actually might create some problems for the rest of the semiconductor names. I know they all had a great day today, but keep in mind that they've been down quite a bit in the last month or so.
George, really appreciate you joining us to take a closer look at these numbers as they came across and the reaction that we're seeing. We'll, of course, have the call here coming up in about 20 minutes, but we'll get more reaction coming up shortly. Thanks again to George Tillis. Joining us after these Apple earnings, we're going to have Max Weinbach with us to take a closer look at some of these numbers as well. Market on Close. We'll be right back.
Let's see, Western Digital. Yes, subscribe, give like to this video. We recommend to buy Western Digital long time ago here.
Real-time market coverage meets expert strategy. From the opening bell,
we'll see how much tomorrow. 600? Yes, can be. Yes, put all your questions in chat. When did you buy? How much money did you make? Yes, let's discuss what happened to Apple. All reports are super good, super positive, better than estimate, but Apple went down. Take a look, huge down, 321. It's crazy. And today we discuss how to analyze, and I will show you. 1 second. How to find the best, and we discuss. Right now it will be test. Take a look here, test. What do you think? Is it buy or sell? What do you think in this? put in comments and let's discuss. Is it downtrend or uptrend? Of course, so it's downtrend.
Buy or sell? You have 3 seconds to decide. All right, let's break this chart. Earlier, the market was clearly forming higher highs and higher lows, with consistent bullish displacement candles showing clear institutional involvement. Now, notice, after this break of structure, price created a fair value gap, consolidated here for a while, and then continued higher to form another higher high. After that, price reversed sharply with a strong bearish displacement candle. This aggressive sell-off likely attracted a large number of sellers, encouraging them to believe that market had turned bearish. However, the important thing to notice is that despite this heavy sell-off, the current candle has rejected the lower prices with a long, lower wick. Also notice, during this move, price hunted a large number of stop losses placed below this consolidation, which acted as inducement. At the same time, price is now respecting this bullish trend line. Also, according to the Dow theory principle, as long as the previous higher low remains intact, the uptrend is considered valid. Therefore, since price has swept liquidity below the consolidation, shown a strong rejection from this trend line, and reacted from this imbalance, the overall market bias remains bullish. So, we can look for a buy entry here, place our stop loss below this structure, and target at least a 1:3 risk to reward. For additional confirmation, after this liquidity grab, you may wait for a bullish displacement candle or a market structure shift to the upside before entering. Now, let's see what happens next.
Uptrend.
Yes, our target was achieved perfectly. If you liked this analysis, don't
Yes.
forget to like,
Okay,
share,
yeah,
and
subscribe.
subscribe.
See you
Buy
next
or
video.
sell? You have 3 seconds to decide.